How are you now? You're listening to the Theory of Thing Investment Podcast. My name is James Whelan, Managing Director of Barclay Pearce Capital's Wealth Management Division. This is, as mentioned, the Theory of Thing Podcast, sponsored by Barclay Pearce Capital. I am joined by a very good friend and someone who is slightly smarter, but definitely much better looking than myself, Heath Moss of HLM Investments, courtesy of Adelaide. We've got DankTrader 4000 is going to join us in just a few seconds. I hope he can figure out how to work the link into StreamYard and get himself into here. But you are listening to this on various podcast providers and also watching this on the YouTube as well. We're going to get that done. New sponsor, new year, new everything. Heath, how are you now?
Good morning, James. I'm very well. Good morning and good afternoon, good evening to everyone else out there, depending when you're listening to us. Happy 2024. I think we can say that this week, even though we're a month in. I think it's still legal.
I've brushed the nonsense of 2023 off me, and 2024 is now well and truly headlong into it, and we are absolutely kicking bottom. Some of the companies that we've had cooking away in the back row have had some pretty good news out of those ones too, which is good. So it's just working on with some of those things. Clients are happy, people are happy, things are sort of moving. The direction and strategies that I've got is fantastic. I did take an extended break. We're going to go into this really quickly. Coming up today, Fed, RBA, commercial property in the States. I'm going to talk a little bit about food. We are joined also, he's just managed to come in, DankTrader 4000. I'm going to add him into the stage.
Beautiful.
How are you now?
Dank, how you going?
Finally, we are going to be talking about Super Bowl stuff. We have got a Seattle fan in DankTrader. We've also got a Niners fan in Heath, and we've got someone, myself, who supports the Saints over in Saints in the States, the Saints in the NFL. That's who I support. They will not be in the Super Bowl this year. Neither will the Seattles. But the Niners will be taking the Kansas City Chiefs. We'll get to that at the end, though I will. Now, the long extended break that I just had, which was a good one, down on the farm at the DR site, on the beach house that we've got down in East Gippsland. Noticed how green it was down there. As much as it was like working and still putting in the hours and still being able to do the management and actually the direction and strategy and stuff that I do, and also some of the advisory and some of the nutting it out of the corporate stuff that we're doing too, and some of the bigger pictures. So I did actually really probably manage to actually take a break and get my head set. 2023 was such a tumultuous year with everything that happened up and down and left and right that it was necessary. And it's something that I'm just going to really pay attention to this year, making sure that you just stay level, stay focused, and stay on the track that you want to do. The main takeaway that I did have when I was down there looking over the farms, looking at the cows, and there was some beautiful cows out there too. I'll pull this up on the screen and see if I can pull this up. But some extraordinary cows. But the big thing that I did manage to figure out, here we go. I'm going to get a picture of one of the cows over here, see what I can do. The big thing that I did manage to share screen, here we go, was look at that cow. Hang on, I'll pull it up on the thing. Look at that. See that? That's cattle. That is cattle, my friend. That is good. Yep. No, that's good. So the thing that I did manage to notice was that as green as it is, it's perfectly green, it's thick. You can see from that photo that I just put, it's thick, it's green. Was that a number of farmers, all of them, that went with the Bureau of Meteorology with their call of El Nino, the other way around, El Nino, droughts coming. People you realize just how much people make the decisions based on that. As much as we see it's a news story on the ABC, it's going to be hotter, great. We'll know that we'll probably have water restrictions coming up at some stage. People made decisions on this because of how quickly this was actually going to happen. El Nino is coming. It's going to get hot. There's going to be a drought this year. Make activity now. Every farmer slimmed down the amount of produce that they had sitting on the farm, i.e. the number of cattle or the number of food that you actually have sitting there, and made belt-tightening decisions and made a lot of decisions based on the farming practices and the strategies you were going to do. You can't just switch farming on and off. You have to have a lead time and you have to strategize a plan for it. A lot of them made those minds for it. We are underweight the amount of livestock that we have on our farm based on what we could be doing right now. And I believe that probably most farms at the current stage are doing that as well right now. If you would like to know about food prices and why food prices are going up, we did notice that the sales last Monday morning, we were receiving about $400 a head more than what we were receiving at the previous sales comparable a few months earlier. Food prices are going back up. Don't blame it on the Woolies truck. Don't blame it on Woolworths. Don't blame it on bits of news like that. If you want to point the blame it on understocked farms, and the reasons behind that. Obviously, there's 1,000 more things, and everyone wants to be an expert on margins and all this sort of stuff. Woolworths profit margin on food is 2.5%. It's not them.
It's been that way for a long time.
It
was actually higher in 2014, 2015, around 4%. So they've actually come down, and competition through Audi, etc., has done that. So as much as Albo on that one, I was scream at the television screen that Woolworths and Coles and that are ripping us off. It doesn't seem that way.
Yeah, that's right. That's right. I'll tell you this right now. I'm going to stop talking in a second because I'm going to go over to Heath being a genius. But the vein, I mean, I saw it everywhere. You make decisions based on what the experts tell you that they're going to be doing. I'm not saying they were wrong in the decision, or like if they had the data and that's it. I'm just saying maybe a few questions need to be asked about the urgency and about the data that they were looking at, and maybe why it was so imperative that they do. Because food prices are going to keep on going up locally because of just how understocked we actually are for being able to produce based on what we can do. Now over to Heath.
Beautiful.
The market wrap.
It's been a little bit of a topsy-turvy start to the year. We thought things were going to come off a little bit, and then they've just turned right around again. So as much as things change, they stay the same, isn't it? Isn't that the same? Something like that. So we've seen tech ripping. We've seen, where are we going? For January, the SPX and NASDAQ were up about 1.5% to 2% each. The XJO was up 1.2%. And I'll drop a stat for you. So in any year where the previous year has delivered 15% or more in return, so which is what the SPX did last year, and then January is then positive, there is a 92% chance of a positive return for that year. And the average return is 16%. It's only been 1 year out of the 13 instances that it hasn't, and that was 2018. And then you line that up with a election year, which is an 83% chance of being positive. We're starting to look like we're going to have another good year in 2024, but I don't think it will be without its bumps in the road, let's say. So but anyway, January was really good for markets. Again, the same things driving markets. Big tech, the Magnificent Seven, doing a lot of the heavy lifting. They're coming out with earnings right now. We'll go into that a little bit more in a second. But then also you've got rates. The rhetoric has changed as it did towards the end of last year, as to, how high will rates go to, okay, when is the first cut? And we got a first indication from Fed and Powell this week saying that basically March is too soon. The data won't support it. So now markets are pushing out the first Fed cut to possibly May, but more likely June, July. Which begs the question too, will the RBA cut before the Fed now, given that how weak economic data here is in Australia, which I'll cover again soon as well. But basically...
I'm going to flick between that. As you do that, I'm going to flick up some stuff that's here. The real household disposable income. Gareth Aird has been posting some stuff that'll make your eyes spin. You do that, and I'll do this while you talk.
I'll cover the Australian economic data that's come through because it lines up with that sort of gear. So we saw in the December jobs figures that we lost 65,000 jobs, which was totally unexpected. I think the forecast was for 30,000 ads. The big worrying sign was 100,000 full-time jobs were lost. The ads came in through part-time. So there is a significant weakening in the jobs market there. The unemployment rate stayed the same, but that was only because the participation rate dropped so heavily. A lot of people came out of the market, which they usually do around Christmas because no one's really hiring around Christmas. No one starts hiring until late January or early Feb. So a lot of people dropped out. And that kept the unemployment rate steady at 3.9. But that figure was very concerning. Then we saw retail figures, which line up with what you're showing there, James, there of a 2.7% drop in retail figures seasonally adjusted in December. And then the November figures were revised down from plus 2% to 1.6%. And again, you can look at that real household disposable income there. It's diving simply because, higher tax, higher cost of living, etc.
Tax. Look at this tax. Look at this tax. Look at this tax. Just look at it. Look at it.
Look at it.
Look at it. You look at it. Look at it. Look at it harder. Household income tax. Look at that. That's the tax cut. Brought nothing down. That's percentage. Now look at this. This is the annual change on household income and tax paid. That is a blue line that is now pushed through 20% into 23%. Annual percentage change. But after everything that we've been through, after everything that we had to do, after everything that happened with COVID and everything that we had to pay for, they're jamming that on us now. I mean, obviously we've got to pay for it somehow, which is actually something that a lot of us said. How are we going to afford all this sort of stuff? And it was just, oh no, it's fine. Don't worry about that. We're just going to print more money. Carry on.
Well, the funny thing is, corporate tax and personal income tax are soaring in terms of receipts. I mean, and it's not only the percentage of household income that's paid in tax now; it's the fact that our population has grown anywhere from 1 million to 1.5 million over the last couple of years due to high net immigration. That we're seeing such a much larger tax base come in for the government. So I think if Albo and that co want to stay in, they're going to have to deliver some more tax cuts at the lower end of the cycle, lower end of the demographics to win some voters back, because this sort of stuff is becoming front page news, and a lot of people are starting to talk about it, and it is hurting. I mean, a lot of that money could be, if you want to help families and the cost of living prices, etc. Let them pay less tax. I mean, it's an easy one. So
sorry. Back on you. Yeah, we're on dead. I'm taking my desk assistant for a quick burger to realign our priorities for what we're going to do this year. So, mate, let's go.
As a burger does. But yeah, have you got my screen back up, or you still got your tax stack?
No, I'll do you. It's all right. Okay.
Oh, beautiful. So you can see on the SPX there, you got the breakout there above the previous highs last year of 4,600, and it broke old highs to start the year around the 4,800 mark, and it's around the 4,900 mark. 5,000, knocking on the door of 5,000. A lot of index forecasts are being revised up, and especially on the back of those stats that I gave you before, it does look like it's going to be another really positive year. The XJO, yes, we hit a new high the other day, then gave it all back yesterday, and it looks like we're going to finish on a new high again today. So a little bit of volatility there, but the XJO looking really good. We start our earnings season. Most of the half yearlies come out in February, so they'll be keeping an eye on that. Iron ore, met coal have stayed relatively high, so we could see some upgrades for BHP, Rio, and the like. But retailers, I think, will struggle with some of those stats that we saw before from James there, that household disposable income and discretionary spending are very tight at the moment.
Yep.
So there's that. Let's talk a couple of earnings. Let's bring up Apple first, because these are my favorite. Actually, Apple are probably my favorite tech stock looking forward over the next few months. And I'll tell you why. They came out and it was a pretty good report. They did beat the street on the revenue and earnings. They gave no real forward guidance, though, which was a little bit unusual. But China sales dropped 13% on a year-on-year basis. But that does come back to mid-single digits on a constant currency basis. So a lot of it was due to a strong US dollar compared to the yuan. But we are still seeing Chinese sales suffering, and that's the thing that's dominated Apple's share price, is that Chinese performance. For me, I think we need to start looking past China, because I think AI and that sort of gear is going to start impacting phone sales. We're just going to just start seeing phone sales pick up again. And a lot of people are going to want new phones so they can run these AI Copilot and Bard and all those ChatGPT.
Yeah, you have to. Yeah, Morgan Stanley did a really good piece on it a while ago, talking about how it's all going to be in the phones and what we have to get done to be able to capture that. That was fantastic. You can find the podcast, listen to it. Strongly recommend you get out there and do that. It is a game changer.
Yeah. You'll need the new chips, the latest processors, everything in your phone to be able to run this AI, because it is power hungry. So the older phones just won't be able to do it. Funnily enough, they estimate there's 100 million phones in China that are come upgrade over there. So we could see the trough in China early this year and see that start turning around. And then you got the India story, which will eventually grow. But services hit a record high again. That's where the margin is for Apple, and where I think most of their earnings will come from in the coming years is services. I really like Apple here for longer term play based on the AI movement. So they'll sell more phones, more tablets. A small part of their business, the VR goggle headsets coming out this week. I think today is the release date. They've got 600,000 pre-orders on that. But there's also talk of a newer model, the Vision Pro 2, coming out later this year, which will be significantly cheaper, as in half the price of the current current thing, which will put them back in competition with Meta's headsets, etc., etc. So that's Apple. I'll quickly touch on, quickly look at Meta, which has been the belle of the ball today. That
Not in
doesn't show it
Congress.
there. No, not in Congress. But it doesn't show it there. But after hours are up 14%. Just a cracking earnings report. EPS, revenue, they all beat. We're seeing advertisers return. And of course, being an election year, you're going to get an uplift there as well, because a lot of money, government money, will be spent on advertising on the election campaigns. So they'll get a big boost there. I think it was trading around, it's $3.94 there. I think it was trading around $450.
It's possible that
so
you
added about,
like after hours is going to be a gappy Joe all the way up much higher. No, it wouldn't be. Yeah. Okay.
Yeah, I mean, it added $140 billion after market. So if you're talking in Australian terms, that's the size, market cap of a CSL, adding a CSL to our market. So that's the type of money we're talking. I won't show Amazon, but Amazon was really good this morning as well. Showed the consumer is still resilient. Bring up Microsoft. We're talking about AI and Copilot or something like that. Microsoft was fantastic the other morning. A fantastic set of numbers. You can't fault them. I'm starting to see researchers come out and start worshipping them and falling in love with the stock, which concerns me, which may signal a top coming through. There was talk of they couldn't fault their report, etc. It was a fantastic report there. These tech stocks too this year should get a tailwind from a cheaper US dollar. The last couple of years, they've suffered from a headwind from a stronger US dollar when currency comes back into the country to report in USD versus other currencies. So this year it should be the opposite, and that will help earnings move along. But the Magnificent Seven have been provided us with another really strong set of earnings this quarter, or for the fourth quarter last year. So yeah, that's it.
You gotta love them. That's good, mate. Look, the two clangers that I got for me, and then we'll get straight on to the next thing. First off, I've got a huge trip coming up in a couple of weeks, getting over to America. It's just been extended out so I can see the Lakers-Clippers game, and also because we actually have some real work things to do in LA as well. But these things always have to be next to each other. If you're going to be in LA, it's going to be like, well, we've got these guys that are going to be in the box next to the basketball, so you need to be at that one. So that's sort of how that goes, which is going to be great. And then that leads on to our bread and butter thing that we've got a few days later, which is going to be the NRL doubleheader opening over there, which is just going to be phenomenal. So it means, Heath, I've got to go and get myself a Clippers jersey. I've got to try and find a retro Clippers jersey. Hey?
You go buy yourself a Kawhi Leonard jersey.
Kawhi Leonard. I'm looking for, there was a fellow who played when they were the San Diego Clippers that played.
San Diego.
His name was Kermit Washington, and he had my number 42.
Kermit.
So I got to find one of those retro throwbacks to San Diego Clippers and just look like I'm a hardcore Clippers fan. It's going to be one of the few times you're actually going to catch the Clippers who are higher up on the Western Conference than the Lakers. It's going to be sensational with that team.
The best team in the West at the moment.
That's right. Okay, so the other thing, the Fed. Look, we've all talked about what the Fed has talked about. 1,000 other podcasts will tell you that sort of bits and pieces. It was interesting. Andreas Sten Larsen did mention that what was left in and what was left out. They left out. This is actually what was interesting. They removed the part that starts the U.S. banking system is sound and resilient, and the rest of it was in there, and they replaced it with the committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Anyway, they removed the bit about the U.S. banking system being sound and resilient, and look what happened to regional banking in the States over the last couple of days. Absolutely phenomenal. Really picked up well. Thanks very much. The other one that I've got here, just flick off that. I'm going to go to me. This is EM fund flows. I put this up last week. Look at that. That is some huge EM money that's going in there. EM on a relative basis, all about relative valuation. EM is looking sensational and needs a big bid there. You're never going to get the worst out of China. You're never going to be able to say, oh, yeah, China's over and behind us. Whatever the next thing is, the next thing. Obviously, India is fantastic. Any way that you can find leverage into the emerging market space, I think it's pretty worth making sure that you've got some sort of an allocation to that. Now, without much further ado, go. We've got.
Just speaking of emerging markets, I have been allocating some funds to GQG locally on the ASX. Fund manager here about a third of their funds under management are exposed to emerging markets.
That came from
and probably the only
the
fund.
Echidna?
Sorry?
Was it that was the Echidna's idea the other day, wasn't it?
Yeah. And
good.
it's looking good. They're basically the only
GQG.
fund manager to see net inflows, strong net inflows for the last 2 years consistently. So,
okay. Now, thanks for hanging around. Yeah, it is good. Yeah, GQG might be the tip of the week. Actually, I'm a big fan of it too. Smart guys, and I think they're actually launching an ETF. Last time I talked to them too, so pay attention to that.
Yeah.
DankTrader 4000. Thank you for hanging on to the line. Long time listener, first time, well, many time caller. Now we've got the Super Bowl coming up in 2 Mondays' time. Hit me. What do we got? Show us the prelim multis. What do you got? Go.
I was uncharacteristically pretty blank looking at it yesterday, mainly because the 49ers made the appearance. I suppose my true colours with the Seattle Allegiance, but there's probably a couple that I'm looking at. Is my mic super quiet right now?
It's super quiet, mate. I'm trying to turn you up.
Wait, mate. I'll just I'll start hollering.
It's better.
Yeah. Okay. Cool. Wasn't really a multi, like the multi kind of lines weren't really that great. I mean, the benefit of what we were doing last year was that we're picking a line across all, 9 games over the week. So I just picked 3 that I think that are single line items. They won't take forever. I'll just run through them with why. The worst odds of the 3, fumbles lost. Fumbles lost first half and second half. You can choose yes or no. There's rarely actually fumbles lost in the second half of Super Bowl. That's $1.68. And was it Christian McCaffrey, Pacheco, the 2 running backs? They're contributing 4 fumbles in total.
They're not dropping the ball. They're not dropping the ball. Go on.
They're not dropping the ball. So I think that's an easy one if you want to get a little bit of juice on it. Second one, Purdy Mahomes to combine 50+ rushing yards is $2.55. And watching old Brock last week, he's sneaky fast. He's sneaky limber. So
he's sneaky quick, isn't he? That's right.
I
love him.
And then this one, I reckon it's a smoky, but I think it's actually pretty reasonable. Super Bowl MVP to be anything other than a quarterback, or running back, fullback, wide receiver, or tight end. It's $3.10. I reckon McCaffrey's a sneaky for this. Like, I think this is built for these sort of games. So if I was, to put my
who else is built for these sort of games? Travis is absolutely built for these sort of games.
Yeah, I feel like this is one of those ones where it's like it's going to be a non-quarterback kind of like froth fest, which I'm very much looking forward to. I hope that's the case.
Yep. Pacquiao could be a shout there too if the Chiefs get up, which I hope they don't. But
All right, Heath, you got a pick for us?
Yeah, I got a multi. I got San Fran covering the line at -1.5. I've got McCaffrey anytime touchdown scorer. Death, taxes, and McCaffrey scoring a touchdown. You can pretty much bank that. And then you got Pacquiao as well, anytime touchdown scorer. The one weakness for San Fran have been defending the running game. Saw that against Green Bay and the Lions. So I think he will get in for a touchdown. That's paying about $5. So I really like that. I think that's a good value. But yeah, I'm obviously wearing my San Fran jersey here. I mean, it's a bit old school. It's got Garoppolo on the back. I need to get a new one with McCaffrey or Purdy. But I think this is the year San Fran finally break through. We've been at 4 of the last 5 East Conference Finals. Was in 2019 Super Bowl versus the Chiefs. So I think we'll get it done this year. We're looking good. We're looking resilient. 2 comebacks coming into this. I think we'll get it done.
All right, not bad at all. Look, no time for me and the amazing multi was absolutely going to, but we're going to jam it in next week for sure. Thank you very much for joining us, Dank. Sorry about cut you off. We'll get into some better stuff next week for sure. Thank you all for joining us on this one. The Theory of Thing Investment Podcast. Dank, make sure you stay on the line because we just got to download your thing onto the computer, so don't switch off or don't get out of the studio. Heath, mate, always good. I hope you have a great weekend. Cricket starts in a couple of hours this afternoon too.
Yep, one day. Beautiful.
Yep. Go the Aussies. Hey, you know what? Go West Indies. I'm loving this team. It's gritty. They're robust. They're miracle workers, these boys, and I love them.
That win was great for Test cricket. That was
I was
fantastic.
on every ball, hanging on every ball, and I was cheering. And my kids were just like, "Are you serious?" I'm just like, "You have no idea how big this is for them and for the game."
Yep.
Good on them. Great, everyone. Have yourself a good one. This is the Theory of Thing Investment Podcast, sponsored by Barclay Pierce Capital. Stay tuned. for more stuff that we've got coming out. We're going to change the format of the show in a bunch of ways. A lot of exciting stuff. Any questions, feedback, please let us know. Any 5-star reviews, also hit us. Anything less than 5 stars, take it outside. I'll see you in the streets. Thanks, guys. Have a good one. Bye.
Have a good 24.